Welcome back to The Explainer. Today, we're diving into something that feels, well, a little bit like a modern-day treasure hunt. We are talking about India's unlisted shares market, an arena that is absolutely having its biggest moment yet. For years, this was a super exclusive club, a hidden financial ecosystem where shares traded quietly through private dealers instead of on the big stock exchanges. But now, it's experiencing a massive, massive gold rush, and the hype is just off the charts. We're going to unpack exactly what's happening in this shadow market, who's making absolute fortunes, and maybe more importantly, who's losing it all.
So let's dig into the central mystery here. Just imagine having the chance to buy shares in an absolute powerhouse company years before the general public could even touch it. That's exactly what a select group of early investors did with the National Stock Exchange, or NSE. They didn't just sit around waiting for the opening bell of an IPO. Nope, they navigated the unlisted market to lock in their stakes early. But the really big question we need to answer today is, was taking on that extreme level of risk actually worth it?
Because right now, after years of delays and virtual queues, these blockbuster IPOs are finally in motion. The National Stock Exchange is filing for its IPO, and giant entities like Geo Platforms are right behind them with their draft papers. Now, these aren't just any companies. These are total behemoths. And the wild anticipation for their eventual public listing is exactly what's been fueling this frenzied gold rush leading up to today.
To really wrap your head around the sheer gravity of this IPO, just look at the expected market capitalization. We are talking about a staggering 5.2 lakh crore rupees. The issue size alone is projected to be somewhere between 25,000 and 30,000 crore rupees, with nearly 15 crore shares hitting the block. This isn't just an IPO, it's a monumental financial event. And honestly, it completely explains why early prospectors have been so desperate to grab a piece of the pie before it goes public.
And hey, this hype, it's actually backed by massive fundamentals. 10,300 crore rupees, that is the NSE's profit after tax for the financial year, out of a total income of over 18,710 crore. When a company is generating that kind of cash, operating as a dominant market leader with a crazy network effect, it's no wonder its unlisted share price more than tripled. It jumped from about 670 rupees back in July 2023 to around 2,085 rupees today. The fundamentals are, without a doubt, incredibly strong.
Section 1. Listed versus unlisted returns. A reality check.
Now, the real story here is told by the Primex 40. This is an index tracking India's top 40 unlisted and delisted companies. And if you look at the longer time horizons, the unlisted space looks phenomenal. Over 2 and 3 years, the Primex 40 absolutely crushed the listed benchmark Nifty 500, delivering compounded annual returns of 12% and nearly 21% respectively. If you got in early, you were riding a massive wave. But take a look at that 1-year mark on the left. The picture completely flips.
Yeah, so the crucial takeaway here is that the easy money might actually already be gone. Over the past year, while the listed Nifty 500 stayed pretty flat, the unlisted Primex 40 actually fell 12.4%. Even the crown jewel, NSE, saw its unlisted price drop 5.2% recently. This is a huge, stark warning to new investors who are rushing in right now expecting instant wealth. The market is going through a serious reality check, and the days of blind, guaranteed returns, well, they seem to be over.
Section 2. Real Investor Journeys. Prospectors of the Gold Rush.
To really get how this market operates, we've got to look at the people actually taking the bets. Let's look at the extreme highs and lows through the eyes of Viren Punjabi. He jumped into this space when he was just 20 years old. His biggest win? Buying unlisted shares of D-Mart directly from the retailer's employees right before its IPO. He got in at about 180 rupees a share, and post-listing, it skyrocketed to 6,000 rupees. That is an insane 33 times return. But on the flip side, he bought into Pharmacy during its COVID-era boom at 38 rupees, betting on a turnaround. And today, it's sitting at just 6 or 7 rupees. It really goes to show how this hidden market can mint a fortune overnight or literally wipe out your capital.
Then we have Nitin Balchandani, who learned a totally different and very painful lesson about how unlisted shares actually work. He bought into Hexaware Technologies, and when it finally listed, he was sitting on a notional gain of over 100%. He doubled his money on paper. But here's the catch. Because he was a pre-IPO shareholder, his shares were locked in for 6 entire months. He literally couldn't sell. By the time that lock-in period finally ended, the price had completely tanked, wiping out all his gains. As Nitin so perfectly put it, listing gains are not guaranteed profits. In the unlisted market, the strict rules of liquidity can cost you everything.
And get this, sometimes
even when you win, it can kind of feel like a loss. Take Niket Shah, an equity market professional. He bought into NSE in 2020 and watched his money multiply 5 times over. A huge win, right? Well, not to him. He actually calls it an underperformance because if he had put that exact same capital into the already listed BSE, he would have been highly liquid and could have made 100 times his money during its post-IPO surge. In fact, Niket is actually pretty bearish on the unlisted market right now, pointing out that the space feels heavily saturated and the risk-to-reward ratio is really shrinking.
So, if we pull together all the collective wisdom from these early prospectors, a super clear playbook emerges. If you're going to play in the unlisted market, you absolutely must focus on the fundamentals. Do not just buy because of FOMO. You have to beware of severe illiquidity. Remember, your money gets stuck. You must meticulously check those lock-in rules. You need to constantly track valuations against listed peers. And above all, you need immense patience. Like one retiree who bought NSE at 3,000 rupees, you really just have to expect holding periods that span several years.
Section 3. The unlisted landscape, where the money hides. Now, NSE might be the most famous name right now, but it is certainly not the only giant operating outside the public exchanges. While NSE dominates the very top with a market cap over 5 lakh crore, there are billions of dollars actively trading hands across a massive variety of sectors. We're talking energy giants like Naira Energy, huge tech service providers like Capgemini, rapid delivery startups like Zepto, and hospitality platforms like Oyo. You even have Cochin International Airport sitting right there on the list. Billions of dollars are constantly moving in these specialized sectors, totally out of sight from the daily ticker tapes of the regular stock market.
But as we marvel at all those billions, we really have to remember one thing. Buying unlisted shares is essentially placing a bird cage right over your own money. The capital gets trapped. As Niket Shah pointed out in our sources, the risk you take in the unlisted space is literally 10 times that of a listed stock, simply because you cannot easily hit a sell button. You are completely at the mercy of finding a willing buyer through a dealer, negotiating some price in the dark, and just crossing your fingers that the company eventually lists without punitive lock-in periods.
Section 4. Balancing your portfolio.
So, how do you manage all this? Well, building a resilient financial strategy is exactly like snapping together colorful building blocks. A healthy portfolio needs different pieces, different types of assets to maintain its structural integrity. You absolutely cannot rely solely on highly concentrated, unlisted bets. Actually, our expert Viren Punjabi admitted that at one point, unlisted shares made up 60 to 70% of his entire portfolio, a concentration he now openly admits is absolutely wrong by basic wealth management standards. If the market turns, a tower built out of just one block will just completely collapse.
To safely navigate this, think of your portfolio as two forces working together to guide your wealth. On one side, you've got your core for stability, your reliable mutual funds, your debt instruments, the safe bedrock of your money. On the other side, you have your edge for opportunity. These specialized investment funds are well-researched unlisted shares that can give you that massive alpha. They are way stronger together. You need that steady, liquid core to give you the psychological comfort and the financial runway to take those wild 10x risks in the unlisted dark.
So, as the massive NSE and Geo Platforms IPOs loom right there on the horizon, we find ourselves at a really fascinating crossroads. We have seen the legendary 33x returns, but we've also seen the devastating lock-in traps and that recent 12% drop in the unlisted index. So I leave you with this. Knowing the extreme illiquidity and the 10x risk involved, will the allure of unlisted shares reshape how you allocate your portfolio? Or, as the recent data kind of suggest, has the easy money already been made, leaving the golden era of the unlisted rush entirely behind us? Thank you so much for joining me on this explainer, and I'll see you next time.